Good evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. A look as to how the markets panned out this Friday before we take you through the top headlines. Well, we got off to a very steady start, so no complaints there. We managed to hold on to the 5,900 level. It was a lot of buying in the oil and gas stocks which really led the rally. But by the end of the day, we were off the day's high, led by a little bit of selling in the cap goods as well as the banking counters. A very firm market breadth and broader markets too followed suit. 5908, that's where the Nifty shop today. 19,445 for the Sensex. That's high by a good 121 points. Well, lots of big corporate stories. We keep you up to speed with them after the headlines. History at Bombay House as Ratan Tata steps down as the Tata Group chairman after 21 years. The 44-year-old Cyrus Mistry will take over at a time when the global economy is going through turbulent times. Bharti Infratel makes a weak debut. The stock lunges close to 13% on listing day, and analysts believe that the issue is overpriced and that could explain the fall today. The government is not in a hurry to notify the delay in GAR implementation. Sources tell ET Now that an announcement will be made by the Finance Minister P. Chidambaram when he unveils the union budget in February next year. India's largest power producer NTPC may soon sign a fuel supply agreement with Coal India. Sources say NTPC will sign 10 to 15 pacts with Coal India for supply of 10 to 30 million tons of coal. Well, to our top story for today, and it's the end of an era of sorts in the history of corporate India. It's the day when Ratan Tata will be stepping down as the chairman of Tata Group. Cyrus Mistry will be taking over the reins of the Tata Empire. Vijay Iyer, our correspondent, is standing right outside the Bombay House right now, and that's the very place from where he commanded the Tata Empire. Vijay, one would expect a fairly somber mood at the Bombay House today, considering the legacy that this man leaves behind.
Absolutely, Abba. As we all know, Ratan Tata led the chairman as the whole group for 21 years. So in that, a legacy has come to an end today. But as far as the Bombay House goes, Ratan Tata himself is not at Bombay House today. Ratan Tata is at the Tata Motors plant in Pune, where he began his illustrious career. And the new chairman, Cyrus, as expected, arrived around 9:30 a.m. in a Tata Manza. If I could quickly ask my camera person to pan, it is this black color Manza which has been parked is what the new chairman came in today. It's just parked outside Bombay House. And yes, in a way, it's a very nostalgic day for many of the thousands of employees. And as far as Cyrus Mistry goes, the insiders say the transition had begun a year back, and Cyrus Mistry has been taking charge of various Tata Group companies for some months now. So in that sense, it's a business as usual day for Cyrus Mistry, and as we speak, he is inside Bombay House taking full charge as the new chairman. So indeed, yes, a historical day in the calendar of corporate India, and particularly the Tata Empire today has come to an end after Ratan Tata retired at the age of 75.
A momentous day indeed. Many thanks, Vijay, for giving us all of those details. In fact, for Cyrus Mistry also, he is going to be taking over the reins at a time when the economy is just about getting tougher as Ratan Tata passes the baton on to him during a fairly tough global challenge that we are presented with. Nisha Podar is here to tell us about the task cut out for Cyrus Mistry. Nisha, it's fairly big boots to fill.
As Cyrus Mistry takes charge at the Tata Group, this company, TCS, the largest software exporter of India, is the least of his worries. But filling into Ratan Tata's shoes is not going to be an easy task. But Cyrus Mistry, who's in his mid-40s, will bring to the table the much-needed fresh energy and new ideas at a time when Tata Group is so widespread globally in an economic turmoil situation. Now, $100 billion Tata Group, with 14 main businesses, 9 of them gave less than 10% returns in the last fiscal. The debt pile is also a whopping $26 billion. The biggest dragger being Tata Steel with its huge operations in the European markets. Back home also, the telecom arm Tata Tele really requires revival as well as a game-changing idea. When we talk about Ratan Tata's pet project, the small car Nano, that also really requires a magic touch to really make it big. In this situation, Cyrus Mistry's task is well cut out, and going forward, he will be choosing his own ways, pruning and streamlining the businesses in his own way to give the group his personal touch.
Okay, thanks very much, Nisha, for giving us those details. So, fairly tough task ahead for Cyrus Mistry. But moving on then, N.R. Narayan Murthy, Chairman Emeritus of Infosys, believes that Cyrus Mistry will certainly do well as Ratan Tata's successor, even as the group is likely to face challenges from its international business.
The biggest legacy of Ratan is that he has demonstrated extraordinary growth. He has grown the group from 2 billion to 100 billion or something like that, in a factor of 50 times. All of this he has done legally and ethically. All of this he has done demonstrating the highest level of integrity. And all of this he has done with a sense of courtesy, grace, and humility.
As he really steps down today, he's leading a group that's huge and also very diversified. What sort of challenges do you think this leadership transition is going to see? I mean, from where you stand, what sort of challenges do you really see?
While there will be bigger challenges, many of them international, because Tatas have a huge international presence. But given the fact that Cyrus is a smart person, he is youngish, he is dynamic, and he has the support of Ratan and others, I have no doubt at all that he will continue, he will perform and be worthy of the name of the House of Tatas.
I think what Ratan Tata has left behind is that he has taught the group to think big. When he took over, I don't think our combined turnover was even $10 billion. In the last 20 years, it has increased to $100 billion. The opportunity was there, he grabbed it, and he taught all the companies to think big. And most importantly, to think beyond the shores of India.
Well, he has taken the group to the different heights altogether. The sales have gone up almost 43 times during his tenure. The profit has gone up over 50 times. He has 28 odd listed entities, all doing well. And the Tata Group's, the logo has improved its value considerably. So he leaves a great Tata brand. Tata was always a good brand, but he has taken it to be the #1 brand of India.
What I believe is the single largest success of the Tata Group, it's strangely a small company, Titan. The reason behind it is India has been very poor in terms of design. We don't have any world-class products which we can be proud of. Titan has been one product which is has world-class designs as far as watches are concerned, and it is now diversified into jewelry and now into many more things.
Ratan has shouldered it beautifully in maintaining what I may call the Tata DNA, especially with respect to value systems and ethical values. He has fully maintained that. As he says, maybe in terms of growth and the rate of growth, the group had to sometimes pay a price for that. But because of him, the Tata Group did not compromise on values and on ethical business dealings. So I think he's done a great job.
And remember, you can catch an ET Now special show, Ratan's Legacy, tonight at 9:30 p.m. Certainly is an end of era of sorts, but moving on then to the equity markets, a fairly strong day of trade for the equity markets. You had the Sensex and the Nifty, which were up by just about 0.5%, although we did temper off from the day's close. Broader markets also followed in tandem, so you had the mid-cap index high by 0.7%, the small-cap index put on about 20 points. In terms of sectoral movers, clearly it was the oil and gas pack which led the way, a 2.3% gain for that one. Tech stocks not too far behind. The IT pack did well. It was healthcare as well as banking that was a bit muted by the end of the session. It was the Bank Nifty which weighed down on the index during mid-afternoon trade, and then things gotten worse from there. Moving on then to the index gainers, Reliance Industries up and about, ONGC, BPCL did well for itself, and Wipro too was an outperformer in today's session. Some stocks in focus. Suzlon was in the limelight on the upside. The lenders will be meeting today to discuss the CDR package. The promoters sold 2% to raise 63 crore rupees and now will be selling stake as part of that CDR package. Very strong volumes, and the counter did well in today's session. Lloyd Steel also did very well. Remember, the name of the company has now been changed to Uttam Value Steels. The Miglanis have acquired 58.3% controlling stake in the company. They reported net losses of 213 crores over the last 2 financial years, and the current debt of the company stands at 441 crores. They are considering to increase their capacity utilization by 50%. Panorama Life Sciences, there was a block deal earlier in the day. Close to 73 lakh shares were traded at an average price of 36 rupees a piece on the Bombay Stock Exchange, higher by 5% by the day's close. Some of the retail counters did witness quite a bit of activity today. So the likes of a Pantaloon Retail did very smartly. Shoppers Stop as well as Provoke, so quite a bit of buying activity. As pointed out, it was the oil and gas pocket which really did well for itself. So names like an ONGC, a BPCL, IOC featured on the list. Remember, the oil ministry is proposing a hike on diesel prices at the rate of 1 rupee per litre every month over the next 10 months. And as they plan to do that on account of bridging the wide deficit, as officials believe that will really avoid a steep hike and keep a lot of the controversies at bay. So that really augured well for the oil and gas basket. Meantime, NMDC was up on reports that the deal with Silverstal may get stalled, and the proposal to set up that plant might just be delayed. But on account of that, you had the counter doing well in the session. Some fundraising plans for Union Bank, it was a higher by close to 1% as they approved raising capital via preferential issue. On the downside, though, weakness was inherent in some of the banking candidates. So an Axis Bank off, SBI, M&M too followed suit, and HDFC Bank looked a bit weak. Well, what about the week gone by? It's been fairly steady for the frontliners. So the Nifty, that put on a good 1% for the week. You had the Sensex also higher by a good 1.1%. Good outperformance is what you saw from the broader market. So the mid-cap index was up by 1.3%. Small-cap index a bit muted though, higher by just about 0.2%. Which were the sectors which led? Oil and gas up by 2% for the week. Real estate did well for itself. You had the power index also. That put on a good 1.2%. And you can see the Bank Nifty also, despite today's drubbing, was higher by a good 1%. Some of the top gainers, Tata Park featured on the list, 2.9%. NTPC did well for itself, and Cairn India too, which is, by the way, a top brokerage pick for 2013, was higher in the session. Some of the big losers included the Grasim Industries. Jindal Steel and Power also was down, as was an M&M and a Unilever. Well, that pretty much sums up the market activity for today. But moving on then to the big IPO for today. Today's listing was Bharti Infratel, and it was pretty much a deja vu for Sunil Mittal, given that it plunged significantly on the day of its listing, just like the parent company did. But a defiant management does believe that the issue was priced correctly, contrary to what a lot of retail investors think. Let's get in Yatin Mohta to join in with all of the details as to what the analyst community makes for the listing, as well as what the road ahead is going to look like for Bharti Infratel. Yatin.
Well, as expected, it was quite a disappointing listing for Bharti Infratel. In fact, the Bharti Infratel shares settled lower by nearly 13% at the end of the day, versus the issue price, which was fixed at 220 rupees per share. Now, if you talk about the analyst concern, and valuation is one key concern which analysts believe was the prime reason why there was a such a disappointing listing. If you talk about the current valuations at 190 rupees per share, it trades at almost 9 times EV/EBITDA based on FY14 earnings estimates, and the share price is quoting close to 40 times price to earning multiples based on FY14 again earnings estimates. So clearly on the valuation front, most of the analysts are not comfortable. The management tried to defend the pricing of the issue, but analysts believe that if you compare it with global peers which have superior margins in excess of 70% at the EBITDA level versus a Bharti Infratel which enjoys EBITDA margin of nearly 58%. Also, if you talk about the global peer set, they have tenancies in excess of 2 times versus Bharti Infratel which has a tenancy ratio of close to 1.8 times. So So on the valuation front, most of them are not finding it comfortable to invest at the current levels. In fact, we had brokerages like Ambit wherein they are quite comfortable at entering into Bharti Infratel at 140 to 170 levels. So that is the broad range wherein most of the analysts are believing that Bharti Infratel shares could finally settle at. So let's see how the coming days pan out for Bharti Infratel. Possibly a mild correction from here on is also possible.
Well, if you look at the volume, they're so thin, and I would always be a little surprised that the retail investors would be in a better position to discover a price than what you call the qualified institutional. As a matter of principle, we don't give guidance. We wouldn't be giving guidance for this company as well. But you have the research reports which say that the tendency for the industry should go up from 1.7 to 2.46 over 5 years. We are already at 1.9. So the attempt would be to keep increasing it as far as you can and as quickly as you can. 3G, contrary to popular belief, is picking up very well. Wherever we are taking 3G, we are getting a very good response. And these things do need some momentum. They take some time. It's just been 1 year since we really started rolling it out, so it will take some time. But it's picking up very well. If you look at the data traffic, it's gone up by 60% in the last 6 months. Now that's not a small growth, it's a huge growth.
Budget 2012 brought the ghost of GAR alive, but it seems the Finance Minister P. Chidambaram's budget of 2013 will bury that finally. Highly placed sources tell ET Now that GAR's deferral by a year will be announced in the Union budget in Feb next year. Suchetna Rena joins in with exclusive details. Suchetna, what are your sources indicating?
This is something that investors the world over have been waiting to hear for some time now, and Finance Minister P. Chidambaram has decided what better opportunity than Budget 2013, which will be presented in February next year, to announce the deferring of GAR by yet another year. So GAR now will only be implemented in FY 14-15. The top sources in Finance Ministry tell us that North Block's final recommendations about general anti-avoidance rules have already been sent to the Prime Minister's office for their perusal, but contrary to popular belief that the announcement will come from PMO about the final provisions of this very sophisticated and complicated tax method, the announcement will be made by P. Chidambaram himself in the budget next year. Top sources in Finance Ministry tell us that apart from the deferment, other key provisions will include the fact that double taxation avoidance agreements that India has with other countries will overrule GAR. This basically means that the tax provisions and benefits that an investor gets out by operating out of Mauritius will continue in the face of GAR. Other important points include the fact that indirect investors like P-notes will be kept out of the purview of GAR, and also GAR will only be implemented on businesses where the main purpose is to avoid tax and not save tax.
Thanks very much, Suchetna, for bringing us those details. Meantime, in a crucial board meeting later today, NTPC is likely to approve signing of fuel supply agreements with Coal India, a matter that has been pending for over 9 months. Let's get in Nitya Balakrishnan, who now joins in from New Delhi with the latest. Nitya, will NTPC's decision pave the way for other power companies to go ahead and sign fuel contracts as well?
A board meeting that Coal India will definitely have its eyes on closely. We're given to understand from sources that NTPC is likely to go ahead and actually approve the decision of inking fuel supply contracts with Coal India today. Remember, 10 to 15 FSAs are still pending. They've been pending over 9 months for an assurance of over 30 million tons of coal from Coal India. NTPC had earlier issues with the trigger level of 80% of assured fuel supply. They also had an issue with the penalty, but we're given to understand 3 weeks ago when NTPC met Coal India in Kolkata, all these issues were rested. Also, the mandate coming in from the Power Ministry that all power companies will have to go ahead and actually sign the documents within the next 3 weeks is something that's forcing NTPC to actually go ahead and ink those documents. Now, remember, this is something that will actually set the ball rolling for other power companies. Over 30 to 40 FSAs still pending. We're talking about an MOU with CIL which stands to expire on 31st for assured coal supply. So if NTPC actually bites the bullet and gives its nod for fuel supply agreements, Coal India definitely a big breather for the company, and also a whole host of other power companies are likely to follow suit.
Okay, so this should get the ball rolling for some of the other power companies to go ahead and sign those fuel contracts. Thanks for those details, Nitya. Time to get to our special year-end series, Year to the Ground. Now let's focus in on the aviation pack, where the Indian aviation industry has hit a pocket of turbulence in 2012, to put it mildly. The full-fare premium luxury airline Kingfisher was grounded with bleak chances of revival. The Indian skies were finally opened up. The foreign carriers can now pick up a stake in Indian Airlines. And the government has allowed direct import of aviation turbine fuel. But why have no deals taken off just as yet? And what is the way forward for the Indian aviation industry? Sumit Chaturvedi wraps up the year that was.
2012 took off with 6 airlines in the Indian skies. But it now seems the year will close with just 5. With doubts over the survival of Vijay Mallya-owned Kingfisher Airlines. Kingfisher is laden with debt and employee trouble. The airline began curtailing operations in February with its staff crying aloud to clear salary dues. They went on strike. The situation worsened and finally on 20th October, Kingfisher flying license was suspended. The airline didn't have sufficient funds for secured flights. Kingfisher has over 8,000 crore rupees in debt. Its lenders are in no mood to relent. Meanwhile, Mallya has submitted an interim plan to fly again with 7 aircrafts. UB Group will pump in the funds initially because come December 31st, its license will expire. But analysts are not so bullish given the huge debt. A stake sale to a foreign carrier despite the buzz about Etihad looking unlikely.
I think the Kingfisher's revival is not DGCA, in DGCA's hands, largely in promoters' hands. As and when they capitalize the company, then the operations would begin. And I guess it would be a little while before the DGCA finally approves their revival plan.
2012 is also the year when strike wars plagued Air India's international operations as well. The Government Rescue Act ensured a rupees 30,000 crore lifeline to revive Air India. But the year, one of the toughest for aviation, saw big policy reforms. The government allowed foreign carriers to pick up 49% stake in Indian companies and also allowed airlines to direct import aviation turbine fuel, which constitutes 40% of the total operating cost.
After around 4 months of opening of Indian skies, Jet perhaps will be the first one to sell the stake to Etihad. Kingfisher Airlines is far from revival and airlines in India cannot import fuel directly. Consumers may perhaps have to live with fewer carriers and cheaper airfares in the new year. Sumit Chaturvedi, ET Now, New Delhi.
Moving away from that, and it's Foundation Day of the Congress today, and as it finishes 127 years, a young gang rape victim struggling to stay alive occupied the Congress's mind space. On its Foundation Day, the party president, Sonia Gandhi, joining Prime Minister Manmohan Singh in promising quick justice and saying there would be no Happy New Year greetings for them. Wishing the woman speedy recovery, Gandhi said that no time should be lost in punishing those responsible for the crime.
We normally wish each other, but not so today, because our thoughts are with the young woman who is fighting for her life. Our only wish today is that she recovers and that she comes back to us.
We share the anguish and the anger of the country over this heinous crime. So you have my assurance that our government is committed to bringing the guilty to justice as soon as possible.
On that note, we come to an end of this edition of Business Day. Thanks so much for watching. Here's wishing everyone a Happy New Year.